Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon live webinar series. Before we get started, let's take a look at the shared disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the disclaimer, and let's welcome Dimitri Pargamonic to the stage, who's going to be talking about weekly at the money straddle tracker. Dima, you there? There he is, and we'll remove that and welcome Dimitri to the stage. How you doing, D?
Good morning, Will. How are you?
Let me share your screen.
And
there's the Market Chameleon landing page, and we're ready to go.
good morning, everyone. In today's session, what we'll do is take a look at how an at the money straddle in a particular stock. We'll just pick a stock and see how did that tend to perform week over week. And the question is, if we reference actual option prices and we track them. So let's take a strategy, and an at the money straddle is premium. If you're buying the call or put, that's at the money, or selling the call and put on the same strike, that's at the money. That's a option strategy. And the idea there, well, if the stock moves, implied volatility goes up, the straddle will increase in price. Or if the straddle tends to be richly priced and overestimates the volatility or builds in a premium for uncertainty, it will tend to decay and lose value. So since you could buy or sell the straddle, the question is, well, how did that straddle perform over time? How does it tend to do? Is it break even over a longer period of time? If it took, a few 10 weeks, 12 weeks and looked at it, does it just break even over time? Does it tend to gain or lose value? So let's take an example today, and I'll type in SPY. So we're going to go in the search box here, and SPY. This will bring this to SPY's main summary page. And then we're going to go on our main menu. On the left-hand side, we're going to click on Tools, and we're going to click on At the Money Straddle over here. This will bring us the At the Money Straddle details. Let's click on this menu to minimize and expand our screen. And here, what we do is we look at a week-to-week performance. So here you have the end of week, or the start of week, week of Feb 9th, 2nd, and going all the way back. And then what we do is for each observation, we say, okay, the week of Feb 9th, if we looked at the straddle, and here we started at 10 a.m., so we give a little bit of time, because from 9:30 till 10, the markets can be a little bit wide or chaotic. So we'll say, okay, at 10 a.m., if we take a look at that straddle, where that's priced, and then track where that same straddle is, the next day, the day after, and so on. What happened to that straddle? Did it lose value? Did it gain value? Well, and by how much? So over here, the week of February 9th, you could say if we took the straddle from Monday to end of day Tuesday, so we started at Monday 10 a.m., Tuesday end of day, what happened to the value of that straddle? Here it says it lost 15%. Well, if that same straddle from Monday to Wednesday, what happened to that straddle? It lost 30%. What if we held it till Thursday? Well, it only lost 9%. So you could see that even though it lost from Monday to Thursday, it recovered some of that earlier losses. It was down by 15%, 30%, only 9% for a 3-day hold from Monday to Thursday. And we do the same thing till Friday. So this would be from start of Monday, 10 a.m. to Friday and end of day. So here, for 4-day hold period, it lost 19% of the value. We could also do it if we looked at from Tuesday to Wednesday, Tuesday to Thursday, just to give ourselves some comparisons of other holding periods. So as you can see here, from Tuesday to Thursday, it gained 89%. From Tuesday to Friday, 83%. From Wednesday to Thursday. So there was a day in there, or maybe a few days in there, that it did, for a certain hold period, it had a pretty big gain. So now that we have this information, we could kind of look back in time and say, okay, well, that was for, one period, Monday to Tuesday, Monday to Wednesday. What if we went back several weeks, did the same thing? All right, so now we have February 2nd, from Monday to Tuesday, that straddle lost 11%. From Monday to Wednesday, it gained 2%. From Monday to Thursday, gained 64%. From Monday to Friday, lost 85%. So the idea there is, well, how does it tend to do if we took a longer period of time and tracked it? And there's going to be wins, there's going to be losses, but how did it tend to do over a longer period of time, given the most recent history? So this is using, this is cancel and replacing with the most recent history. And then we could get our summary stats. So if we look from Monday to Tuesday, and we took our observations, so maybe there's holidays in there that we didn't have an observation, but so we'd have to skip that. But from Monday to Tuesday, if we looked at the win rate, so we have to take it from the long or short side. So this is looking from the long side. Okay. From the long side, there are only 18% of the observations that straddle gained in value, was profitable. Okay, so you could see here, this week gained 3%, here gained 14%. So it shows that, there were some gains, they were less frequent. The losses were more frequent, where the holding period from Monday to Tuesday, the straddle lost value. What was the average loss? So if we took all of these, the average loss was 10%. So we had, losses of 27%. We had losses of 18%. We also had gains of 14%, losses of 1%. So if we took the average, on average, it lost 10% of its value over those observations, with a median loss of 13%. So half of the observations were above, half below. The range lost as much as 27% of its value, and gained as much as 14%. Okay, so this would look for an option that has at least 1 week or longer to go, because if you don't have a week, you would go to the next expiration. So you can see that we didn't have, as much as 20% loss, but as big as 14% gain. And that gives that range for that 1 day historical high and low, and the average return. So from this stat here alone, it shows that over an expanded date range and observations, the straddle tended to be overpriced. Okay, there's a risk premium in there, besides the suspected volatility for any potential unexpected move, and it tended to be overpriced, and we could see that on average it lost 10% of its value. Okay, what if we expanded it to the full week? Okay, if we just said, okay, instead of Monday to Tuesday, we just held it all the way till the end of the week, and we did it as a week-to-week type of roll. From Monday to Friday. Then next Monday we did the same strategy from Monday to Friday, and so on. So that would be the Monday to Friday. That's a 4-day hold. So now we have all these stats here. Okay. And here it shows that, again, the win rate was 18%. So more losses than wins. Obviously, from the long side, more losses than wins. But we know that from the long side, you could have potentially one big win that offsets 2-3 losses, right? Because if you're long a straddle, it could go up more than 100%. Straddle could lose 100% of its value, but it could go up more than 100%. It could go up 200%, 300%. So we do see more losses than wins. What was the average return of all of these, right? So we see there's a gain of 77%, 24%, but we had losses as much as 83%, 85, 94%. So from here, from a week-to-week strategy, the win rate was 18%. The average loss was 34%. Okay, with a median loss of 42%, meaning half the observations were above that, half were below. The max loss in our observations was 94%. Max gain was 77%. And this shows that on a week-to-week basis, based on our most recent historical data, using, I think there's like 12 weeks here, something like that, that the options tended to be richly priced or priced above, the volatility that, followed, where the straddle lost value 18% of the time it gained value. That means that 82% of the time it lost. Okay, so say 1 out of 5 times in gain. The average decline was 34%. So over those time periods, 34%, third of its value. And the range, right, as much as 94% to 77% gives us the max and min range in that period. So 94% would have been here that week, 77% here. So if we wanted to view that, we could open that up, say view, and this gives us the data. So here it says on February 9th at 10 a.m., this was where the stock price was. This is where the call and put was for the 690 strike, because that was the closest strike to where the stock was. Okay. The contract value, if you bought the call and the put, was $1,024 for each contract. The straddle was implying a 1.5% move. So then we go to the end of it, Feb 13th, right? We start Feb 9th, Feb 13th, end of day, 3:59. The stock is 681.71. So it was down 1.3% from the start of the strategy to the end of the strategy. The stock went down 1.3%. But we see needed a 1.5%. So here's what happened. The call price became worthless. The stock went down, and we were tracking the Feb 13th expiration. So that's that expiration expired on Feb 13th. So the call was worthless, 0. The put was in the money, was worth $8.29. So what happened? The strategy at the end was worth $829. It was all in the put. Well, if you exit the strategy and it's worth $829, but when you entered, you paid $1,024, well, that's a loss of $195 or 19%, right? 19% of its value. So if we go down the line, that's what we did from week to week, okay? And that's where we got those stats. So we could then close that. Or sorry, we don't have to close that. That's shown below. And we could do the same thing for the other observations. If we wanted to look at, well, if you skip Monday and started a Tuesday, on a Tuesday, the same strategy. Or if we started it on a Wednesday, or what would happen? And then we could look at the stats side by side to see how those options tended to be priced and from the start to the finish.
Hey, D.
So I'm going to stop.
We did it.
Throw
Sorry
back
about
to
that.
you.
We did have a question. I didn't want to interrupt the presentation.
Okay, sorry. I just
Nina was asking, why are we using long straddles and not short straddles? Considering most options traders are usually short these strategies, especially for vol strategies. Thanks. Well, the first thing is, and I didn't want to type it in, but obviously if someone's long the straddle, someone's short, right? So it's hard to say who's long and who's short, but there's someone on each side of the trade. But maybe you can explain why you're looking at it from a long perspective, because everything we're looking at, there is the short side too, right? In this,
you could. It would be the flip, but the flip side of that, right? If you're, but you to track something, you have to pick a side, right? So we just the easier side to say, okay, well, let's just do it from the long side. Not this doesn't mean you should do it from the long side. It's just tracking it from a certain perspective, right? So you're when you say what are we tracking, you have to define it, right? So how do you define it, right? Well, what did the value of the straddle do, right? Did the value of the straddle go up or down? You could think of it that way, right? It's not long or short. Is the value go up or down, right? But if we create a win rate, and it's easier to say, okay, think of it as from the long side. But really, the tracking is the value of the straddle. Did it go up or down? Okay. So you could think of it from that perspective, not long, but value of the straddle.
all right, perfect. Thanks, my friend. Thanks for bringing these webinars to the Chameleon community. You have a great trading day, and we'll see you tomorrow, D.
Thanks everyone for joining, and have a great trading day.
All right, we'll see you tomorrow. Thanks, D. Hey, everyone. Thanks for joining another Market Chameleon free webinar. We appreciate the questions and all the new viewers who came by today. Remember to like and follow us on all the social platforms. Thumbs up, any comments on YouTube, always appreciated. Everyone have a great, safe trading day out there, and we'll see you tomorrow. No Ryan this week. We're going to try to do it today. Obviously, yesterday the markets were closed. We were going to try to do it today, but has the flu pretty bad. So we'll see Ryan next week. So everyone, we will see you tomorrow morning, hopefully. Have a great, safe trading day. Bye-bye.